Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of January 21st. 21st is Tuesday. Monday we have off. It's Martin Luther King birthday. And so that's going to give us a shortened week, but a great start of January, and I'm excited to get this watch list out to you. We're going to start it off with a little review, a little market talk, and then we're going to get right into some great setups for next week. And what's really great, I'm excited. We're in the middle of January now. The first month is rolling by, and the discipline has been great with the methodology, meaning that we've been only taking quality HPS setups, and they've been working like a charm, and it's just no reason. Like I said, my goal is to continue to bring you only the best setups. We could go back here to Family Dollar, which was a great example of teamwork in the chat room, because one day we had Family Dollar gapping down. And when we get that gap down, if we're looking at a stock and we recognize, a 1, 2, 3 pattern, and we're able to recognize a lower trend line before that trend line gets tested, and that's the key here. Then we prepare ourselves for a trade at a level when the stock comes down to not being reactive but being proactive to the trade, and this is exactly what happened on Family Dollar FDO. We were able to really get that trade, and that was a nice scalp off of this lower trend line for the day. And sometimes they're just easy entries, and we get them as a swing trade, a couple day hold. And in some cases they just react so fast that we take the profits off, and that was in the case of Family Dollar. But this is a really good overview of why we prepare ourselves I prepare myself so much for the week, because I just want to have those setups in front of me as they play out, and it's just it really is the key to making good money in the market. It's not the random walk through Wall Street. It's an organized, mapped out, detailed plan, and we have the discipline and the patience to let things play out. And when they do, we have the confidence to take it, and then we just take the profits and we move on and let the next thing. There are a couple key ingredients to this. Making sure you're in a quality name, a quality stock is really an important prerequisite for taking trades for myself. And also market conditions. You have to always understand the overall market conditions. Are we in a bullish trend? Are we in a bearish trend? And that really helps decide on how you want to take these trades. And right now the market has been in a very bullish trend. So, I do concentrate on some of the pullbacks on quality names because we do get those buyers jump right back and you see these big reactions. So here's Family Dollar, and this is, again, a great example of what HPS is about. When you look at a chart reading is like map reading. I'm a big hiker and outdoors person, and I'm also, just love seeing patterns in nature and patterns in the market and understand that. So there's certain things on a chart that I understand is important. So I would look for those landmarks, so to speak, or these little areas, and some of them are candles, some of them are just pivot areas. But the whole methodology is broken down into some 5 key elements. It's looking at that recognizable pattern, looking at those moving averages, also understanding what support and resistance is, and trend lines. Trend lines are important. How to come about a trend line, how to identify a pivot, how to identify a change of trend, and all these line up, and you're able to actually start to profit off of these things. And it's just a matter of time, a little bit of discipline, and a little bit of patience, and the next thing you know, these trades will set right up. You're able to get into them and take profits, and that's what it's about. It's not about making something happen each day. It's letting those trades come to you, let those trades show themselves to you, have the patience just to get into them when they, or wait for them, and then have the discipline to get into them when they're setting up. So Family Dollar was a good example on that. And again, we're going to learn a lot. We're going to push a lot more in the next few weeks talking about candlesticks, because candlesticks are really a key indicator of just kind of a I call it the glue that holds everything together. If you have a great HPS setup, which you have a recognizable pattern, you have possible trend line, you have the oversold stochastic or overbought stochastic, depending on your trade. But these are what we're looking for, especially the stochastics. So the stochastics we're waiting to get the setup, and when we have that set up, we look for the other criteria. And if we're on a lower trend line, then we start to understand that there's a couple things that are lining up when we start to pay attention to that trade. If we have, and to get those levels all lined up, we learn about a 1, 2, 3 pattern. And now, after everything is said and done and we have our HPS setups, the real key now comes in to just add in a few more of the indicators. And one of the great indicators is those candlestick reversals. And, like I said, we're going to discuss a lot more of those in the next couple of weeks. But they're really good candlesticks I like to pay attention to. Is really the hammers, the engulfing patterns. These two, in general, are just my favorites. And sometimes I just look for those, and really the tails, the shadows that we see on these candles, really, if you go back and back test them and look back at them, you'll see that any really good tail usually is a marker for a change in the current direction, especially if you see that candle come into play in a trend, but at the lower part of the trend where other indicators are lining up. So that's what we're looking for. We're not just taking any candlestick. Remember, this is just not any trend lines, everything has to be lined up. You have to have the stochastics lined up. You have to have the trend line lined up. Then if we have the candle, that's when that candle really starts to play. And I'm going to show you good examples of this today. So this was Family Dollar. We were able to profit off this lower trend line because we recognized it before it happened, and we were able to just sit there and wait for that trade to happen, and again, you can see the results from that. So let's take a look at some of the others. First of all, let's go back out to the markets right now, and we're taking a look at the overall markets. The overall market's still in a very bullish trend, but let me tell you, on Friday I took one of my first shorts again, a hedge in the SPXU, and you can't help but think that the market has, maybe a little correction in it. There's enough people looking for it. It's a self-fulfilling prophecy. I'm not going to call a top or anything. Just kind of a little protection. We've been scaling out of a lot of longs. We're able to get some nice profits. Now it's a time to just let those next good setups set up, but also, protect ourselves on the short side in case the market does pull back a little. So I started a little hedge in the SPXU, and there's not much you could tell from the chart here. Everyone's calling for a correction. The market's showing strength. You would there's some larger trend lines that are outside here that go all the way out. Might push up to 1870, so that's why I put that down. Currently 1850 seems to be a good level that's holding us back right now. So we get back above that 1850, 1851 on the cash, we probably have a good shot to the next level up here, at least that upper trend line up here. And that's where we're looking at right now. Who knows? I mean, we start to get some selling on Monday, Tuesday. Maybe the trend starts to break down. We have to prepare ourselves for that. There is an underlying trend line. It is kind of a wedge pattern here, a rise in wedge pattern. So there's caution, that I'm looking at here. This kind of a wedge pattern typically breaks down. We're kind of extended on the daily. Very choppy. The 60-minute chart is pulled back nicely. And the last 60-minute chart was really the key level here as we got down close to that lower trend line. Oversold 60, and you can see that bounce. And that's what we really were able to trade effectively off of. Now we pulled back again in an oversold level on the 60. The daily has been choppy at best. So we're not getting a really good daily read on this. The 60 is telling us, hey, maybe a little more upside. You know what? It comes down to individual stocks for me right now. That's what we're keying in on. That's what we're making our money on. So we're going to concentrate on those. The market here, we'll read the signs. I love the intraday markets, identifying those channels and some of the good setups on the futures. But right now, the stocks are just doing great. So let's take a look at some of those. We're going to take a look at a trade so far in January, and we're going to just go. I want to go through these just as a fast review because we're going to notice on this list of stocks here, everything from Newmont Mining to Procter & Gamble to Cabela to Verizon, Costco, Amgen, Vale. One thing they all have in common are they're very good stocks and good companies, quality names and stuff. So we're going to go through those, and you're going to see something else they have in common. And those are going to be, of course, the patterns. Most of these are going to be HPS setups or something similar to that. And we'll show you the education behind how they made money. Or if they didn't, I'll show you that too. We're going to start off We'll start off with Newmont Mining. Beginning of the year in January, actually January going into December going into January, and you can see that there was a nice lower trend line, and we actually rotated back up. And Newmont Mining, even at the time, that was January 3rd, was a good trade. I did hold it for a while, and I'm not that big fan of miners, but these are acting pretty good. But anyway, you can see the lower trend line on this trade. There was definitely a reason behind that entry. And then Procter Gamble, PG, that trade was based off of recognizing this downward channel here, and that trade took place on the 7th of January. And you can see we're kind of coiled up here on Procter Gamble, kind of coiled up and chopping, very weak on the channel. But if we look at the 60-minute chart, you'll notice a good 1-2-3 pattern back over here, recognizing three pivot areas, drawing two parallel trend lines, and then realizing that the market has come back down to what I call divergence or double bottom with the oversold 60 here, plus the daily. So this was really just a trade off of this support line, and this happened to give us a nice little return here, and it popped up. We just took profits because the 60-minute time frame, and we learned about the 60-minute being our entry, 60-minute telling us our exit, and we just took it off. And that's discipline. That's discipline when you're able to recognize an entry zone, but also understand that if the momentum's running out, you might have another indicator, a trend line, an overbought level. You have to also understand that markets go up and go down, and if you get into that habit over and over again, it's just like you just continue to take profits. It starts to build up. You start to gain confidence. You start getting addicted to this. How to do this. You're not worried about leaving anything on the table. This is a business, so you're in and out. You get your signal. You get your signal to get out, and you wait for the next trade. You look on the HPS. You wait for those alerts to come out for you. Remember the HPS setup. And again, let's go to the next one. Cabela's. We've been trading Cabela's a lot, and that's been always a great sign. And that was the last trade we got. Last trade on January. What was this? January 7th here. I think it was around here. January 3rd to the 7th was from here to here, and it was a nice little trade. But you could actually see this on the daily, I think. Just a little pullback here. I think it was the flag here we're looking at. Even looking at this December oversold, the divergence, all these things you get on the HPS thing. But right here, this real fast little pullback triggered that and popped right back up here. It happened again right here, and you can see the reactions on it. So, it's just about having the patience, waiting for the setup, and then taking the trade. Now, Costco was a trade not that long ago. It's really a nice pullback trade. We pulled back down to this level. We sent out the alert, but what happened was we got in a little early. The next day, they came out with same-store sales, and it popped, pushed right up to the trend line, and we actually ended up taking the profits because, you pushed right up against the trend line of a 1-2-3 pattern, and, that's what we do, take profits. Now it's been consolidating. But the fact is, we recognize this one off of this lower trend line, off the 200-period moving average, oversold stochastics. This whole area was an HPS zone right here, right in this area. Got oversold. We're on the 200 on the trend line, and I think we mapped this one out, and we actually talked about it possibly hitting this lower trend line, which I do like. I did like this trend line. We started our position here, realizing it could actually move, and if it came back down to this level, that's the game plan, is to just kind of, it's always the first entry, second entry. And then you have your good position right in this zone, right where you want to. Because when you get oversold, lots of times the momentum shifts real fast without getting a lower trend line. And plus, we're right on the 200, right on that trend line. So everything look how it's holding on to that trend line. Look how it's holding on to that 200-period moving average. This one still could actually pop a little bit higher, but a great trade off of this level, just waiting for it. And this is what it looks like on the HPS thing. So, for those out there who might be, this video usually is broken down into two parts. The first part here, it goes out to everyone. And then the second part, when I said, is really in the members video where you have the new setups. But this is what the new setups that you're going to see are going to be outlined charts like this, showing you your buy zones and showing you your profit zones. Now, we got into this, as the note said, we started at position 15, 13, small scale, and it was going to add as we get closer down here with an established stop. Now, this is all programmed into Day Trading Radio's dashboard, and what happens is, this all gets tracked, and when the price zone is hit, it activates an alert. You get the alert on the dashboard. You also get an email alert telling you that the price has entered a buy zone. Please look at the chart. And then again, as it continues to play out, you can see it actually bounced right up, pushed right into that profit zone. And an alert went out telling you, your trade or your this stock has hit its profit zone. Please review trade. Just giving you an alert, which is great because these are all HPS setups, and that's what we want. We also want to know when to get in on the lower trend line, where the best risk reward trade is, and this is what this is doing for us. All right. Here's Amgen. We took the Amgen trade, 115 to 117, and basically this is what we call a large flag. I call it a wide flag. A wide flag is usually a 1, 2, 3 pattern in a larger channel, a larger upward channel. So you have this kind of a really good upside channel. You have a large 1, 2, 3 pattern, which is right here, 1, 2, 3, right here. And then we had this underlying trend line coming in. Also had this support line right here and an oversold level. So again, of the indicators, of is the foundation, the HPS. I'm going to show you that in a second. See if I can show you that. Here we go. This is the high probability setup 5 indicator method. Is the price on a confirmed trend line? Is there a recognizable pattern? Is the support and resistance? Does it touch a moving average? Candlestick triggers, very important. The hammers, piercing patterns, engulfing. No indicator, stochastic candle combination. And then, of course, the overbought, oversold stochastic. So, we're looking at the stock. We're trying to run it through this machine and saying, all right, are these things lined up? If they are, is it, how many do you have lining up? Is it on a confirmed trend line? Is it oversold? This is 1. This would be 2. This would be 3. This would be 4. That's a 4 indicator. Anything 3 or higher is considered an HPS setup. Meaning it's a high probability, a low risk, high reward trade entry. And based off of this, the candlestick triggers, very important. Very, very important. We have this lining up with the stochastic. Sometimes those are good. That's called a stochastic candle trigger or combo. The stochastic candle combo trigger, 2 different ways. We're going to go into that more. But also, let me just show you something. All the setups that we take is, I have these on Day Trading Radio in the playbook in the forum. So if you go to the forum, on your dashboard, you go up here on the top on the dashboard, and the dashboard is what you have there. But just, you'll see this playbook playing. You click on that, and what's going to happen is you're going to see all these video courses, little videos explaining each one of the HPS setups. Lower trend line, stochastic bounce, the channel breakout, stochastic rotation, what's a coil stochastic downward wedge, trading plans, dual stochastic, 1, 2, 3 patterns, 2 EMA breakdown, channel bounces. There's a couple more that's going on. That gives you about 8 to 10 setups that we're looking for in the market. Those setups get listed in the HPS site, like here, and when they get triggered, you get the emails and we take the trades. Simple as that. So let's continue on. So that was a nice Amgen trade there. Amgen, and then the Valet. Valet, actually, I lost money on the Valet. And that's just what's important on that is sometimes quality of the name is important. I recognize the channel in here, right? And I was looking at this, just a little pullback play, and it got a little bounce in it, but then it failed, and we just had to take the loss in it. It's this is what a stock I call has stock rot. And look at the direction of the overall last 2 years of the stock. There's a big difference between looking at a stock like that and looking at a stock like this. You have an upside trending stock. You buy the pullback, it easily pushes back up there. If you get a stock that has some stock rot, you know, you're not going to get the bounces. There's sometimes, you know, you get some of the bounces, like I said, you get the bounces, but they're not as good. And first of all, this is under $20, and $20 stocks for me don't move as good. It causes you to get into you know, bigger positions than, you know, sometimes that you can handle. And you know, in some cases you'll get that move, but you won't get the breakout. And this actually showed you that it was going to run out of steam here, right up against the trend line. It was actually a good short. And you got to understand, the overall trade here for the last 2 years is, you know, shorten the pops. So it was obvious right there to short the pops instead of trying to find the bottom on this, you know. So that's why I try to stay away from those under $20 stocks. And I would definitely consider that as a rule for anybody, because you'll see the better results or better stocks, better price points. And you know, in this case, downward trending stock, you short the pops. Rising stock, you go long the dips, you know. So here was a great HPS setup. Well, you know, Baker Hughes, I was you know, just kind of just drooling when I would see this set up. It's a very obvious 1, 2, 3 pattern. 3 pivot areas, even though the gap up here, the pullback and the bounce. Once we establish that, draw that draw that one line underneath us, draw that parallel line on top of us here. Now we recognize that we have a good channel that we could trade off of. If you get back up to the top trend line and you're overbought, you have that short setup. You get oversold, lower trend line touch plus the 200 period moving average, you get the buy setup. So this was very key. Love the setup 100%. We took the trade. It was it was a stock that actually opened up, gapped down to this level. So we were waiting for it. Took the trade. It was a scalp. Look at the nice move it made. That's that's what I love to take advantage of. You know, when we see these setups, the gap down, the reversal. We were on top of this. PHI 5178, 5178. 5154. So we got in right about here, you know, realizing that, you know, this was reversing, and you can see exactly where it went from there. Fantastic setup. And as you get a great setup in HPS, you're going to get that great setup on the HPS site. So this is a chart that gets sent out to everyone with the buy zone, 5150 to $50. A classic multiple indicator setup, gapping down this morning, starting position. So the notes out there, we sent this out, gap right down to our position, and before you know it, you can see it came right in here. That trigger goes out, email, look where it just ran up to. This is where it is right now. So, you know, a lot of times I'll leave these things in the HPS because they have recognizable patterns and stuff. We go back through them and say, all right, you know what? We could reset this. Let this set up. If this came down to this lower trend line again, and you know, this would be another ideal entry level down here. So sometimes we just continue to rotate back in and out of a stock as long as it established a really good level. Look at it, right to the penny, basically. It came down, and the same thing to the upside. If we get up here and the stochastics rotate back up, you know, you really want to take a look at that daily. You know, a possibility, very good possibility of a pullback right into this trend line. And then from that point on, we continue to read it. We might get a divergence next time, might have a 200 period moving average double bottom. It might be a you know, everything here lays out. These are all part of the playbook plays. And, you know, this is how you want to trade these. Craft has been working out good. KRFT. And let me just get this one. This is, you can see we've been studying this one and analyzing it, and you know, understand this trend line is broken out. This was Cheesegate here, you know, when they ran out of Velveeta, and then it came right back. And my call was to break back above 54.50 at this point. And look at where we are. We pushed up here, very close to, what do we get? 55s. And I expect this one to actually take out the highs. It got up to 55.12. I'm expecting it to go up to 55. Look at that 55.12 where that came in. If you go back here, you see this gap? right at 55.12. So there was some resistance here. There was definitely some resistance. We're a little extended on the daily, and just like anything else, the market does not have to just always go up in a straight line. You can move up a little. You can get a little momentum. That's how you make money. You take it this way, you take it that way, or you wait for a retrigger and then you take it all the way. Anyway, great trading stock, Kraft. It looks like it still has more upside. Very close to the recent highs, so it's still very good. Regeneron. Did we call this? I said watch for the major move out of this. $300 was an option on this one. And where did it go? Went to 302. I mean, how do you get a move from 272 to 302 in one day? Well, you start to read the signs. This is a large, what we call a wide flag, and this has historically been a good chart to trade off of it. Very strong chart. We followed it to an oversold level down here to the 200, pushed back up, rotated back down, and then off to the races. Just have to wait for that setup again. Not going to be in that one in a while. Not for another. And then Riverbed, RVBD. Finally, this was my takeover play of last year, and it actually had the bid. It had an offer come in last week, and it's pushed this thing up to $20.50, close to $21, and gone profits. Let's move on. There's some other ones out there to be taken out. Solar City, great stock, did that well. Oh, SJM. I mean, this was, again, same situation. Recognizing a 1-2-3 pattern, underlying trend line, oversold, close to the trend line. This is not an exact science, but whenever we have a decent candlestick here, you start to see some candles. These really start to come into play, and then you start to identify an area that you want to trade off of, because this has worked out well. This has worked out well. There's even some small patterns here that are playing out. So you know that you have a 1-2-3 pattern here. You have a larger one here. This is all defined for us. We took the trade, and we got a nice little bounce on it, and I ended up taking profits in it. In this market environment, I've just been, kind of taking faster profits, and it's mainly because here's your 1-2-3 pattern. Here's your entry. It doesn't have to be on the exact trend line, but we need to have those 60-minute stochastics lined up. We take that entry. The 60-minute chart here is saying, you know what, it's getting a little extended. Time to get out. Now look at that. It's rotated right back down. Now it's oversold again. Where could this go? Well, we could go some different levels. It could go up because there's a lower trend line underneath us, but it is really nice right now. Let's this is the alert that was out for you, and you can see we triggered that alert, and right from that alert we triggered right up to our profit zone. That's why we took the profit, because it came across. It said profit hit. Let's look at your trade, so we did. Now take a look at this. It actually pulled back here, back into the buy zone. There's still an underlying trend line. I might actually reactivate this one, just because it looks like we can see another test of that trend line, and that trend line's a little more exact on this trade. You can see that actually coming down, maybe possibly down into $95. It's $97.20. The daily, it's chopping around. I don't mind it. I think if we get that trend line again, I'm going to be in this stock again. So that's a little clue for you for going into next week. And we'll set that alert up too. So if it does hit that trend line, that alert will go out again, even though it did already trigger. Riverbed, Herbalife, nice smackdown. We scalped that one. And of course, the Tractor Supply Company, TSCO. Another nice wide flag, lower trend line. Got added to the S&P 500 on the gap up. Did not waste any time, and we took profits, and good thing we did, because look at how this thing came all the way back down. So it was no big deal, We actually took profits. Now we could actually concentrate on this one once again once it sets up. I like that lower trend line, and here it is on the 60-minute chart. So if we did get down to that level again, I would really, really like this one. So we're going to set this up as an alert also. And this is what this will look like. And this is going to be a really good one. Considering Tractor Supply Company added to the S&P 500, if we actually do get a pullback, that pullback probably is going to be a good buying opportunity. So we're going to buy alert here, buy zone here at 72.80 to 71.50. Profit zone, standard $1 to $2, and the stop underneath it. Now let's also just touch base, and this is again, this is actually this is the only free one you're going to get unless you tune into the second half of the video. Just remember, HPS setups, even though they're high probability setups, they work out probably over 85% of the time. When they start to break down, that's an indicator in itself. You know, it's an indicator that something's not right in the market. So we have a lot of great setups you're going to see on this week's watch list, and if these start to break down through the lower trend lines, there's probably going to be a good indication that the markets are starting to roll over. So it's also a great indication when you have a quality name and trend lines start to break down. There's something else out there influencing the markets. So this is actually a great indicator stock right now, because it's such a good setup into this news. It's pulled back a little. So all these, just to remember, you know, market conditions are really important to determine which direction the trade's going to be in. Right now we're still looking at buy-side trades, even though we are starting a little hedge. But just remember, anything can happen, and when that does happen, we have to, we have to see those signals, those signs. What I like about the HPS is it automates signals to me, for me. It's not giving me, I'm not, having my own personal opinion on the overall markets. It's telling me, all right, Johnny, there's a lower trend line. It's been acting great. Why not trade it again off of that level? Versus, well, I don't believe this. I believe this stock is overpriced, and I'm not going to, I'm going to short it here, even though it tells me, it's probably a buy. I don't want to get that. I don't want to get into an emotional or I believe this or I believe that. I just want the signals. The signals start to break down. That's the signal in itself, and then we start to adjust the trades. There's always a little grace period or a shifting time between longs and shorts, and those times tend to be very choppy in the market, and people get chopped up. So if we can recognize some of these settings start to break down over the next, whenever, that will be a signal in itself. So we'll pay attention to that. Here's a great example of LinkedIn, and LinkedIn had a couple of interesting trend lines. You're going to see actually a HPS setup on this week's watch list is very similar, where it has three trend lines converging. This one has the possibility of this darker line at a pivot area there. Whenever we see this really nice candlestick, let me see if I actually could identify that. I wonder if this works here. Yeah, right there. See that little candlestick there? Whenever you start to see that candlestick and it's on that trend line, that trend line is not identified at this point as an important level, but once it starts to put in that spot and you see a big candle, I understand that, and I will recognize that as a pivot area now. So now the next trade comes down to where if this price comes down to this level and trades within this level, then I want to really concentrate on it. So this was an alert on the HPS, and you can actually see here's another one that we had on the HPS setup a couple weeks ago. Ford here showing great pullback. This was a 5 to 7 day pullback. All the notes are there. Not a big mover, but you can tell, wow, nice HPS setup where it is and where it goes. So that's kind of a review of so far what's been happening in January. Now we have a lot of setups this week, and we're going to get into those now. If you're interested in getting these alerts, join Day Trader Radio and become a supporting member of the site. You get these alerts, you get the whole site, you get the email alerts, you get the live trade alerts, you get the chat rooms, you got everything going for you. And you're not going to find anything better. You're not. Period. So let's start off the this week's watch list, and we'll start off right now.